Hello everyone, welcome to the Tesla show. My name is Orhan and in this video we are talking Tesla stock. That's right, Tesla stock, where it's going to be in 5 years, in 1 year. At the end of this video, we're going to know what's the forecast for Tesla stock. We're going to start with Cathie Wood. Cathie Wood is a CEO of ARK Invest, an investment management firm. They're famous for focusing on disruptive innovations, stocks that are expected to bring at least 15% annual return. Last year, in 2020, they posted a mind-boggling 152% annual return. So, earlier this year, in March, Cathie Wood dropped a bomb saying that Tesla's stock price by 2025 will be $3,000. That is, I believe, the highest valuation for stock out there. Now, keep in mind that the valuation was done back in March. Back then, the Tesla stock was at $655. Today, it's hovering around $1,000 mark, and therefore, I believe we are due for another update. And in fact, Cathie Wood promised to issue an update in January, but we cannot wait till January, so that's why I'm doing this review. Let's look at her model and let's adjust it for what's happening today. Now, before I start crunching numbers, let's look at the historical number. A year prior to that, she was forecasting $1,400 for Tesla. So $1,400, and now she's forecasting $3,000. So essentially, she more than doubled her valuation of stock. Where is it coming from? Well, there's a couple of things. One is the fact that she's now forecasting into 2025. 1,400 was for 2024. And the second one, obviously with new information, she increased the valuation. Before I reveal my numbers, I want to share with you the recent interview with Cathie Wood. Let's see what she says about Tesla.
Tesla's battery technology is unlike any other auto manufacturer's battery technology. Tesla was riding down the cost curve of the consumer electronics industry. So laptops, cell phones, huge volumes, right? And when you get a scaling like that, costs come down. It's called a learning curve in the tech industry. So Elon, you had auto manufacturers and auto analysts laughing at him. Elon is building his car on top of cell phone batteries. Isn't that funny? And what they didn't believe was that the engineering was possible.
Right.
So there was it wasn't, they just didn't think it was possible. And he did. And so even today, these cylindrical batteries that he's been using relative to lithium-ion pouch, lower cost and will remain lower cost for at least 3 years, we think, which means that any other auto manufacturer who wants the same performance and the same range at the same price will have to lose money on every car sold.
And that's a great point. Many people talk about, Tesla killers, Tesla competition, but guess what? Tesla is light years ahead of the competition. Well, Cathie Wood says 3 to 4 years ahead in battery technology. Some other experts say maybe 10 years. But the fact is that the gap is huge and the gap is actually increasing.
Auto sales, many people don't realize this, in the US peaked in April at 18.5 million units and are now at 12. Now, that is not just chip shortages.
Yeah.
That is, I bought my car last year. I'm probably never buying another gas car again. I'm going to wait for an electric vehicle. That's what I think is going on, or some of what's going on.
And that's another great point by Cathie. People will be switching to electric cars much faster than was originally anticipated. And that's where Tesla will be leading the whole transition. So, before we continue, I want to hear someone's opinion on Cathie Wood's forecast. I want to hear from Jim Cramer. Jim Cramer is a former hedge fund manager and now he is a host of Mad Money show on CNBC. Let's hear from him to see what he thinks about Tesla's $3,000 stock price.
I don't think there's a fund manager in this country, that could get away with this kind of thing. Other than Cathie Wood. And I say that because if it were a brokerage house that came out and said this, David, we would dismiss it so quickly as being hype. But Cathie Wood actually is so good that you start thinking, okay, well, what is Elon Musk going to do? I mean, maybe he's got a lot in mind that she's thought about. I always know that Elon Musk wants to reinvent the entire grid. Right. The entire grid, which, remember, was put together in piecemeal.
Let me pause here for a second. Our model doesn't even include the innovations, the future innovations that might be coming our way. You know, you never know what Elon Musk may come up with. Even that $25,000 car that he talked about a couple of years ago, even that is not fully understood, right? The impact of that is going to be tremendous. So let's keep watching here.
So I know that there'll be people who say, Jim, you shouldn't have used the term get away with. But I do feel, David, that she has the cachet to say it and not be dismissed. When I heard it this week, and I spent a lot of time trying to figure out how she got to that price target.
Okay, and?
I just think that she's using the notion that Elon Musk is going to be able to make cars everywhere, but it's not just cars. It's obviously bigger than cars.
It's got to be bigger than cars to get anywhere near that. I mean, it's funny, these different percentage chances she puts on things. The bull case, a 25% probability Tesla could be worth $4,000 a share or more in 2025, so 4 years from now.
That's right. Tesla is so much more than just a car company. If you listen to some of those analysts on the Wall Street, they know nothing. They literally are clueless about what Tesla is all about. They think Tesla is another car company, and that's why the valuation sucks. I don't want you to listen to them. I want you to listen to Cathie Wood and to another analyst I will be introducing to you shortly. And Jim Cramer too. He is a big supporter of Tesla, but he was not always the supporter of Tesla. In fact, a couple years ago, he was anti-Tesla. I want to share with you this short clip where he talks about that moment when everything changed in his mind about Tesla. Let's have a look.
Because I need you to understand what converted me from an agnostic skeptic to an outright bull. About 3 months ago, my eldest daughter got a chance to drive a Model 3 from Oregon to San Francisco. She just sold her beat-up used Ford, she's definitively non-car person. I know she felt trepidation about the battery and the 600-mile trip. But within the first 100 miles, she called me. That in itself is exciting. To tell me how much she loved being behind the wheel of the darn thing. She's never, ever expressed even a whit of interest in any other vehicle. Now she's bragging about driving a Tesla. I told her that I'd driven one years ago and loved it, but never thought that much beyond that. She had 2 words for me. Buy one. About 2 months later, and I too found myself on the West Coast with my wife and another fabulous husband and wife couple who could not wait to put me in the Goldwing Model X. My wife, Lisa, loves cars. Oh boy, is she ever a car person. She'd be crazy. And she was immediately smitten. Now, I have to admit, I love the whimsical nature, the handling, the gull wings were cool. The drive was fantastic. What did she love? The flatulence gimmick. Oh, but she also, maybe like mother, like stepdaughter? But she also dug the come hither button that inches the car towards you when some clown parks his car too close to your machine. I felt the tug. Then Tesla introduced its pickup truck, its Cybertruck, which I thought was ugly as all get out. The press conference, borderline disastrous. The company's lead designer threw a rock at its unbreakable window and it cracked. I figured, okay, so much for the Cybertruck. But then we saw the demand, the huge number of deposits, and it's off the charts. No accounting for taste. That stunned me. I decided then and there, that was it. I'm done. I can't fight it anymore. I wanted the Kool-Aid myself.
And now you know what changed Jim Cramer's mind. It wasn't the financials, it wasn't the information about Tesla, it was the experience, sitting in the car and driving it. And that's what most analysts out there are missing, the experience, because it's not just another car, it's a revolution. But let's keep going. Here's another great point about Tesla stock by Jim Cramer.
There's so much, I wish I had gotten Tesla-itis. That everybody's angry. I mean, the way to get back at themselves the way to stop kicking themselves over Tesla is to go buy Rivian, go buy Lucid. But there may only be one. I mean, it's entirely possible that Tesla is Amazon and that there was no second Amazon.
There might be no second Amazon, he says. Here's my revision for Cathie Wood's model. I use the same compound annual growth as she used. And the only 2 changes I made here is that I'm using $1,000 as a starting point, and I'm going 1 year further into the future. I'm going up until 2026. As you can see, the normal case or expected value, that's what Cathie Wood calls that, is $6,700. Now, if you look at the bull case, it's $9,600. If you look at Cathie's key updates that she used in her model, you'll notice that they added Tesla's insurance business, as well as they take into assumption human-driven ride health services. So one thing I can see that is missing in the model, in the assumptions, is Tesla energy business. I'm not sure why it was missed, but I'm guessing that because it's not big enough, she decided to keep it out. However, Tesla energy business is growing very quickly. Tesla's energy farms are popping up everywhere now in the world. So I wanted to include that into the model. So what I did, I added another 3% into compound annual growth. And this is what I came up with. You can see that the expected value now is $74.15 and the bull case is $10,551. Now this is looking insane. Can you believe that? Especially in bull case, over $10,000. It's more than 10 times, 10x from today's value. Does it make any sense? Do you believe that? Well, depending how we'll look at that. If we look just 2 years ago, Tesla stock was around $75, maybe $80. So compared to 2 years ago, Tesla stock is now 13 to 14 times higher. And if you look at that, we didn't know about the 2 new plants that are coming up. No Texas Gigafactory, no Berlin Gigafactory, even Shanghai Gigafactory hasn't been built yet back then. So from that perspective, Tesla is just starting. And therefore, if we look at that and say, okay, 10 times, maybe it's not that bad. Maybe it's not that insane, even though it's hard to believe that 5 years from now, it might go 10 times higher. Now, obviously 10 times is for the bull case. For the regular, for the normal case, it's 7.5 times, which is still pretty astounding. And if we look at 2022, well, as you can see, the expected value is around $1,500 and the bull case is around $1,600. So Tesla is a phenomenon, right? So even if you didn't jump on the wagon back then, it's never too late. As you saw from my numbers, 10x from today or 7.5 times from today, that's the reality. That's an absolute reality. The next person I want you to listen to is Dan Ives. Dan Ives is a managing director and senior equity research analyst at Wedbush Securities.
Dan, the man who called Tesla 1000 way before it was at 1000.
That's right. He was the first one who gave Tesla $1,000 price target back then. And here we are today.
What do you think for the year ahead for Tesla as we see the competition getting hot for EVs? But the idea is that it's way ahead of the others, even working on making autonomous driving more smooth. I saw that.
Yeah, look, my view, it's not a zero-sum game in EVs. So I don't view it as necessarily Rivian, successor, Lucid, GM, Ford on the re-rating, that's necessarily negative for Tesla. Tesla has an ironclad grip on EV leadership here in terms of market share. And you look at this green tidal wave, I mean, we think by the end of next year, they're going to have about 2 million capacity in terms of from a supply perspective, given Berlin and Austin coming on board. And I think going into next year, they could be called 1.56 sort of million units in terms of what they could ultimately deliver. That would be well above the street with margins that continue to expand. I think that this sort of sell-off on Tesla going into year-end, of course, the Musk selling from a tax perspective, I view it as sort of noise. I think there's a stock that's going to resume its upward move in 2022. 1,400 to our base case, bull case 1,800.
Wow, 1,400, 1,800.
So there you have it, 1,400 to 1,800. The numbers that I showed you earlier, 1,500 to 1,600, are well within this range. So there you have it, $1,500, the forecast for next year. Let me know what you think in the comments below. Let me know where you think Tesla stock will end next year. I'd love to hear from you. Please like, share, and subscribe. Thank you for watching. Take care.